PIK the last 2 days has been going on a good run. It's currently Friday, March 18th, 2022. Scroll out on this 1 minute chart. 2 days of trading. This stock has ran from $1.50, day one, topping out all the way up here at $6, getting a nice gap up. Now we're going into day two, Friday trading. The stock is still squeezing up as it's hitting a new high up there at $7.50. What got this stock up and running? Why is it got all this attention and running up so much? It was literally just about a penny stock, $1. Now it's up times 7 its value, times 6, times 7 its value. Let's break it down. And this is something that we've covered and talked about in the master classes that we put out here at Trading Learning 101. Pay attention to the small little details, put together the story for it to make sense. Recently here, yesterday, March 17th, PIK is gapping up pre-market. They got a fresh, hot press release in the morning. They're teaming up with Disney to celebrate the release of Cheaper by the Dozen on the Disney Plus platform, the streaming platform. Keywords to look for in press releases. Keywords can range from a lot of different words, anything like cancer, FDA approval, if their company's awarded money, if they're an earnings winner, if they are a contract winner. There's all kinds of keywords to look for in press releases. But Disney, everybody knows about Disney. Disney is a juggernaut, a straight up juggernaut. So for a penny stock to be partnering with Disney, that's big news, and you gotta think ahead. That's gonna get people excited. If they have any type of partnership with a juggernaut like Disney, that's going to add value. People are going to chase after it. And the great thing about being in the stock market, you guys, when they drop press releases, and you'll notice this over the course of your career, you're the first to see it. And then sometimes it takes time for news to travel. So you could hear about this right now, and then a week from now, you'll hear somebody mention it. And you'll be like, yeah, I heard about that like last week, bro. Because you're here every single day, you guys. You're getting the news first, right when it hits. And remember, sometimes it just takes time for news to travel. So with PIK partnering up with Disney and the recent conditions of the market, shorts have been getting a little bit cocky. Because all they've had to do was short the top percentage gainers of the day, or the top stocks gapping up pre-market, and a lot of times they were failing and fading off as the day went on. Another key thing to point out is with PIK, the float. It's a low float. It's only got 7.5 million shares of supply for the public to trade. That's a low float stock. So we have a penny stock partnering up with Disney. It's a low float stock. It's gapping up pre-market. And when you look up at the daily chart here, zoom in on this daily chart, and you look back on this, it's a newer IPO stock. Their first day of trading was here on November 11th, 2021. And over the course of this stock's career so far, you don't really see that much volume into this stock. So there's no bag holders holding it up. You got to think differently and outside of the box than everybody else. So putting all of this stuff together, and all I'm really doing is I'm paying attention to the small little details that are in front of me. Small little details that are in front of me, putting together the story, one candle at a time. Let's go back to the intraday chart. We'll go back to yesterday. So yesterday we're gapping up pre-market from $1.50, running up to a high $3.75. Stock market opens from $3.75. We get a shot right up to that $4.20s, $4.20. So we put together a plan on this right when this PIK was hitting $4. We said let it exhaust itself. It already ran up from $1.50 up to over $4. That's a big move for this type of stock. It was up like 120, 150% on the day. That's insane. So let's let it pull back down, get a healthy pullback on it, and then maybe later on we get that big squeeze. We get denied at 420s multiple times right there in the morning. It failed to continue. So right at around 10 a.m. is when we start to pull down. And you could see when we're pulling back, we're not like crumbling and falling apart like super hard. This stock is just steadily, little by little, pulling back, penny by penny. From 4 all day, it pulled back to that $3. So really, it only pulled back $1 from its highs. That's not that much. Nice, steady, slow pullback. Shorts are all piling in on it because they think it already made its move. So as we start to bottom out here at 3, now we start lifting up, trending up higher, back up to that $4, and where VWAP's at, right at $4. From that, shorts ain't making no more money. If a stock's trending up, shorts are losing money. So for shorts, for them to get out of a position, they have to cover. They have to buy to cover. Then when you have long investors, retail traders buying to get into, it's like a double whammy. That's what causes for prices to rip up and squeeze. That's why a lot of people had a hard time understanding why GameStop and AMC was squeezing up so high, because a huge institution got caught with their pants around their ankles. And when you have millions of shares short and you have to cover, that's prices are going to keep ripping until you cover all of those shares. Same thing, same principles apply here with PIK, you guys. It's got news with the Juggernaut company. We already know it's got volume and people's attention. And you got to plan and think ahead before these types of moves. And then after seeing these types of moves multiple times throughout your career, you just come to, when they pop up, you instantly know, I got to keep my eyes on this. I've seen this type of action before. I've seen exact plays like this when penny stocks partner up with celebrities like Oprah Winfrey, Kim Kardashian was another one. Who was another one? I think the Jenny Craig diet was another one. Shaq was one. Whenever you have big celebrities or a juggernaut partner with a penny stock, keep it on watch. We slowly start to come back. We reclaim that $4 right here. Look at all that volume show up. And it's just in time for power hour. And from 4, we squeeze up to $6 a share. And then once again, the cycle repeats itself. We start to fall off here back down to 450s. Shorts, they always think a stock's up way too much. They always get ahead of the curve. They always want to try to top pick. Just like longs. Longs are always trying to bottom pick or predict when a stock's going to bottom or reverse. Shorts are the same way. They're always going to be trying to top pick a stock. When's it going to top out? They feel it's gone too far. Plus, when you're shorting penny stocks like this, it can be hard to find locates. And then on top of that, you got to pay for fees, borrow fees, locate fees, all that stuff. So they feel like they don't want to waste their fees if they don't use their shares. So they feel obligated to use their shares if they reserve them. Rookie shorts, I would say. So as we crumble apart there at the end of the day, pile in on it again. They wake up the next day, this morning, we're gapping up, market opens up, shorts have to cover their position again because they're down and in the red, squeezing the stock up higher.